Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets of the corporate world, and this time we will be decoding THOR Industries' financial results. So buckle up because we have some interesting numbers to unpack. Let's dive right into what THOR Industries has been up to. They've just dropped their report covering the fourth quarter and the full year ending the 31st of July 2025, and boy, do they have some insights to share about their financial health and what they expect for the future. This is a current report, meaning it is about something important that just happened, and THOR Industries is letting us know all about it. We're talking about THOR Industries, a big name in recreational vehicles, known for brands like Airstream, Jayco, and StarCraft. They build the vehicles that let people explore and enjoy the great outdoors. Their stock traded on the New York Stock Exchange under the ticker symbol THOR is what most investors are watching closely. Item 2.02 dives into their financial performance for the fourth quarter and the full year. They released their results, and in typical fashion they included information that is strictly based on standard accounting rules, what they call non-GAAP measures. They're providing these alongside the official ones to give us a clearer picture of how they see their operations performing. The main event here is their press release. This document is like the company's official statement on their earnings. Think of it as their quarterly earnings call. But in writing, they've also put out an investor slide presentation and some frequently asked questions. The slide presentation is where they can visually break down their performance, often highlighting key numbers and trends. Investors love these presentations because they can be a quick way to grasp the company's story for the period. And the investor Q&A is fascinating because it shows what investors are asking and how the company is responding. It can reveal areas of concern or where management feels they need to provide more clarity. Now, THOR Industries is careful to explain that these non-GAAP numbers, like adjusted earnings, are just another way to look at their business. They say it helps explain why their operations are performing the way they are and how management uses these figures. But it's crucial to remember, as they themselves state, you should always look at the official accounting numbers too. Non-A8 measures are helpful, but they can sometimes paint a rosier picture than reality. Well, be keeping our eyes on the official accounting for the full story. Item 7.01 is all about Regulation FD disclosure, which essentially means they are sharing important information broadly, and at the same time this section highlights that their press release is just about past performance. Here is the really juicy part for investors. They're giving us a sneak peek into their expectations for fiscal year 2026. This is forward-looking information, and it is a big deal because it tells us where the company thinks it is headed. Are they expecting growth, or are there headwinds ahead? The investor presentation backs this up with more detail. Not only are they talking about earnings guidance, but they're also giving us updates on industry wholesale shipments and their market share. This is vital for understanding how THOR is doing not just on its own, but also compared to its competitors in the recreational vehicle market. If wholesale shipments are up, it means dealers are ordering more, which is usually a good sign for the manufacturer. Market share tells us if they're gaining or losing ground against rivals. And it's signed off by Colleen Zuhl, their Senior Vice President and Chief Financial Officer. This shows that the company's finance leadership is squarely behind these disclosures. Now, let's talk about what this all means. THOR Industries operates in a market that's heavily influenced by economic conditions, consumer confidence, and interest rates. When the economy is strong and people feel secure about their finances, they're more likely to buy big-ticket items like RVs. Conversely, during economic downturns or periods of high inflation or interest rates, RV sales can often be one of the first areas consumers cut back on. The fact that they are providing guidance for fiscal year 2026 is a signal that they feel confident enough to predict their future performance. However, the recreational vehicle industry can be cyclical. We need to see the specifics of that guidance. Are they projecting modest growth or a significant boom? And how does this compare to previous years or to what other companies in the same sector are predicting? We should also consider the broader economic picture. If inflation remains high or if interest rates continue to climb, it could put pressure on consumers' ability to finance an RV purchase. This could impact THOR's sales, even if their own internal operations are running smoothly. The inclusion of non-GAAP measures is standard practice, but it's a crucial reminder to always do your homework. Don't just take the adjusted numbers at face value. Dig into the reconciliations provided. What specific items are they adjusting for? Are these one-time events or are they recurring costs that are being smoothed over? For example, if they're excluding restructuring costs, that might be a one-off event. But if they're consistently adjusting for certain types of expenses, it might indicate a pattern of underlying issues that the GAAP numbers are more accurately reflecting. Looking at their company structure, THOR Industries is a large conglomerate with many brands. This diversification can be a strength as it allows them to weather downturns in specific segments of the RV market. However, managing such a large portfolio can also be complex and might lead to inefficiencies if not handled properly. We want to see how the guidance for fiscal year 2026 ties into their overall corporate strategy. Are they investing in new products, expanding their manufacturing capacity, or focusing on cost control? The numbers they present in their financial results and projections will tell us a lot about where they are placing their bets for future success. In my opinion, THOR Industries is navigating a dynamic market. Their ability to provide forward-looking guidance suggests a level of confidence in their upcoming performance. However, the RV industry is sensitive to economic shifts. Investors should pay close attention to consumer spending trends, interest rate policies, and the overall health of the economy when evaluating THOR's prospects. The real test will be how these projections translate into actual reported numbers down the line, and whether their market share gains, if any, are sustainable. Alright, that is our breakdown of THOR Industries' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.